Today we're going to be speaking of building the generational wealth, and it's all about preservation, and risk management. So what happened if you lost 10% of your portfolio? It takes 11% to get it back to where it was. But what if you lost 80%? Then it takes 400% to get it back just to where it was before. So good luck with that. And here we're going to start covering those topics more. Good afternoon and good morning, everyone. My name is Russ. Today is Friday here on DataDash, and we're going to speak today of the portfolio building and management. I got a lot of questions like that in my Telegram group, in a discussion group, and people were asking, Russ, can you tell us how to build a portfolio? What are the allocations are? But before I even start doing that, I want to have a simple mathematics with you guys, something that people very often misunderstand. Imagine you had a $100,000 portfolio. You made a few bad trades, maybe didn't practice risk management, or you practiced 2% risk management, but then hit a negative strike for a period of time, and you ended up having 90,000 instead of 100. So you lost 10% of your portfolio. And then luckily you get 10% back. Where does it bring you? Does it bring you back to 100,000? No, it does not. It brings you to 99,000 because 10% on top of 90, it's 9, and 90 plus 9 is 99, and it's not 100. So you lost 10%, you gained 10%, and you're at a loss. And you would be like, damn, that's probably not so much, $1,000 out of 100 with this 10% loss and 10% win. Now imagine we do 20% loss and 20% win, or 30% loss and 30% win. And this discrepancy would start becoming higher and higher. So it's all about not losing so much at the first place. The point number 2 that I wanted to share with you, that it's all not about just percentages. Of course, people ask what percentage of my net worth should I allocate to crypto, what percentage I should have in the stocks, and so on and so forth. But I'm just gonna give you one trading example that I experienced myself, and that also a lot of people do not understand before they at first hand start dealing with that. When you're trading with $10,000 or with $100,000, and you're exiting and entering the scalp trades, it all seems fine. But what happens when you start trading with multi-million-dollar portfolio and your average scalp entry size is several hundred Ethereum? Just an idea of keeping your trade open and closed at break-even and probably paying one period of funding that is coming every 8 hours, 0.01% on top of your position size, already can cost you several $1,000s or sometimes $10,000 if your position sizes are really big. So you start to get desensitized to those costs being taken away from you. And then your position starts running against you. You start feeling like a hero. That's all fine. I can stomach it. It's just a 10K. It's just another 10K. And that can play a really bad trick on you. That's just an example of how absolutes matter sometimes much more than the relatives. That is why someone going 20% down on his $1,000 portfolio can still has a chance to come back to work. If he's in a Western world and developed economy, he would work for 2 days and he would recover those 200-day loss. It is not the same that losing 20% from your retirement $1 million portfolio, where, for example, you reallocated your real estate to make it liquid. This is a completely different story. So please keep absolutes in mind when you are talking about portfolio allocations. The point number 3, please always start with a bigger picture and only then zoom in into crypto, into stocks. It is very important that you first have the basic knowledge, some kind of, reach that, pour that understanding. What are the assets? What are the liabilities? What is the net worth that you have, for example, in real estate? Maybe you inherited some capital in the form of the shares of the company, of the family business. And all of that you need to map into your Excel and to see from where you start. Some people have none of that, and that's fine. I also started from scratch. And so you have to understand then the portfolio that you're playing with, the liquid portfolio, can have a completely different percentage allocation comparing to your net worth. Despite you and your friend are both playing with $10,000 trading, his $10,000 is 1% of what he owns or his family owns in the real estate, and your $10,000 is everything you have. For example, your liquid net worth and your total net worth are in this case equal. And this is not the same picture. So please keep this in mind too. Point number 4. It is very important to understand what happens with your portfolio if one of the particular theses does not work. What would that mean? If your short squeeze candidate goes bankrupt, or if the crypto project you were betting on gets hacked, or the certain narrative that seemed to be the most prominent one within the industry suddenly get into legislation scrutiny. What happens in this case, right? When I started my trading and investing journey, I would be thinking, okay, I have a few $100,000 to allocate into stock markets. Why would I touch the boring things like bonds? That makes no sense. They're going to give me 5%, maybe 10 if the nominal value would reprice. But instead of that, I have so many growth stocks. Each of them can give me 100%. So I only going to do that. Well, I did not consider the risk reward there. So that was like a journey, understanding it while doing and while actually experiencing the pain. That's why I'm recording these videos right now. So you can find the version. I can find the version of myself that I always would, be delighted to see 5 years ago. But unfortunately, no one was there. Is that level of transparency and understanding. So I'm sharing it with you right now for you to be mindful about keeping the boring blue chip stocks, some companies that would have hard time going significantly down, and only adding this cream, this cherries on top. The best potential gainers should not constitute the majority of your portfolio because of what I said in the beginning of the video. What happens if your portfolio that is only constituting those growth companies is losing 50% or 80%? We can go now into the charts and see how those companies are volatile. It will take you 400% to get back to where you were. And you know what would happen after? You were experiencing so much pain, so much stress, that immediately at the break-even point you would sell. So your portfolio would not change, but you would waste several years and a lot of sleepless nights to just get where you were. So please don't put yourself into that situation, because that's painful. And our psyche would work in the way that once you're there, you would just try to forget that ugly game and get out. So you would not make any money on top of stress you would experience. The next point, you always need to keep in mind that things can go down infinitely, especially in the world of crypto. You have to be very careful. You always have to have the invalidation. Very often when I started my crypto journey in 2017, I was remembering many friends were telling me, man, it's like already 95% down. It's not so much of downside from here onwards. It inevitably would have to reverse. And of course, it sounds very funny right now with all the experience we have. But honestly, the things that are 90% down can go another 90% down. And from there, they can go another 90% down. Infinite number of times. Let's have a look on my favorite chart, absolutely favorite, Jaguar Health. That's how we are. And we are on the monthly. We're going to go on the daily. You ought to understand what I'm talking about. I don't even want to go to the beginning of the chart, but you see, like, for example, we had this spike and then we went 90% down. People were start longing again. There is this another spike here. And then what happens from there onwards, we go another 95% down. And then we go, and then what happens there? We go another 98% down. And what happens there? And we go another 98% down. Guys, I can project those companies infinitely. And what's important to understand, it's not that something is 99% down, that upside is very limited. No, the downside is very limited. No, the downside is pretty much unlimited. So please keep it in mind. If you don't see the market structure break, something that we discussed on the Wednesday video, if you missed the Wednesday video dedicated especially to market structure break, please go back down and watch my latest recent video. If you don't see the market structure break, what the market structure break would look like here. First, you want to see that you printed the low, printed the high, and then instead of printing the lower low, you're actually printing the higher low and the higher high. and then you're starting this uptrend. So this is your market structure break. Of course, it can look different a little bit. It can look like you printed a low and then everyone decided, okay, let's long from here, and then we actually swiped all those stop losses. So there are various combinations of how that could look like, and then we actually printed the high, only then we reversed, right? So that low was actually here in order to kick out all the traders that went long a little bit too early. We're gonna speak about those more in details in the Telegram alert group, and hopefully into more dedicated videos regarding to how the bottom formations are actually formulated. But the wisdom here in a nutshell, please, 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 especially if it's the growth, especially if it's crypto, don't try to evaluate the upside based on the downside that has happened with the company for now. Because also many companies are reestablishing new shares. They're increasing their share float. And you would not see that on the chart. You actually can see it on the chart, but you have to project another indicators, on another layer on top of TradingView. And most people just look at the price and they think price went so much down, we are probably oversold. They don't even see what is the reason behind. So be careful, protect yourself from that. And I'm gonna cover two more pieces of advice for portfolio management in the middle and in the end of the video. And let's right now jump into the charts, because also yesterday was quite interesting day in crypto. But before we jump into the charts, I want to address this comments, because I read all the comments, guys, all the comments also in the Telegram group. The user here, Neon Gore, telling me you couldn't have been more wrong about the NVIDIA play. He tried to tell me. And this is what I've been doing and what I've been receiving in the Telegram alert group. Russ, please read this comment. Thank you so much for the group. And thank you for calling 140 top. And I went short at 140 USD, understanding that NVIDIA would go through the correction, ABC correction. This is very typical what we would experience here. Let's look at the chart on the daily. What is 140? This is an absolute top, guys. I called the top on NVIDIA, and yet the user in the comment telling me that I was wrong. And you know why he's telling that? Because I said that NVIDIA is not yet done. And so people do not understand that nothing goes in a straight line, and you can play both directions. You can sell cash secured puts. That's what I've done yesterday. That's what I've done yesterday on this candle. So yeah, I sold the cash secured put at around 96. So I'm happy to collect the premium and probably even get assigned at around $82 if I am actually wrong, but I will be most probably right. And once we bounce a little bit here, my put would print a significant amount of money within a week or two. So yeah, I've been telling that NVIDIA is not done, and there will be a point in time where NVIDIA will trade based on my model, based on my estimates, $180, $200. So if you are like that user, I really recommend you maybe like spending 80 cents a day and getting in the Telegram group, because honestly, it's free what I'm doing. You only need to subscribe for the newsletter that Nick providing, and I think it has an amazing value because it covers all the asset classes, also like natural gas, also silver, also gold, lithium, and so on and so forth. So just to say, I cannot give that frequent updates here on YouTube. I'm saying my long-term views, but everything that happens intraday, it happens on a higher frequency, and that's where you can see that. Yesterday, I've been also explaining the concept of swing failure pattern. We were seeing what are going to happen right now in Ethereum, market structure break, or actually swing failure pattern. But as indicated, I went long. Those are my entries. Always sharing everything transparently. So pretty much in the very, very bottom of the range, you can see the values. That's, for example, curve at 24.5 cents. I went long and quickly went out because I didn't want to keep my positions into the night. And so what we also have done, we closed most of our GDST and DAST hedges, our hedges against the decline in silver and gold miners. And why we have done that? Well, because looking now at silver to SILG ratio, or let's say reversed SILG to silver, I think, in my opinion, we are very, very close to break out of this consolidation range that we've been here for a year and a half. So I think miners would start being repriced versus silver. And yes, looking at the silver chart, I indicated also in the Telegram group, my bottom is somewhere between 25.5 and where we are right now, 27.8. So yeah, fine, we can chop, we can get a little bit into that zone and have some not nice moments. But what gives me a lot of confidence here is the fact how gold to silver ratio is being overextended, and it's retesting this line of resistance here. So I would, how many times we bounce from here? You see here, here. This is 85 ratio, and as I keep telling, my target is towards 40. So for me, the fact that silver is so much underpriced to gold gives me an idea that silver, of course, can go down to 26 and everyone will start screaming for 24. But I don't care so much what actually silver is doing if miners that we own are starting to get repriced, because everyone understands this is the temporary button. Whatever gonna happen with the Federal Reserve, whatever gonna happen, if we're gonna have, let's say, a moment of the black swan and the market's gonna dump 10% more, Nasdaq is already 10% down, imagine it does 10% more, everyone will be liquidated, everyone will be screaming and crying. So Janet Yellen from Treasury, Jerome Powell from Federal Reserve would come up with emergency measure to save the families, to protect the employers, and what that would constitute additional liquidity into the market. So whatever gonna happen from here, I am still quite bullish on commodities. Of course, after the certain retrace, we are not yet done with this retrace, and it can also be boring and choppy just to switch the sentiment, because we got a little bit bullish on the top. I start seeing retail interest, of course, banks, hedge funds, they don't need those wagons of retail longs. They want first to get these longs out, and then they would reverse the price points. The banks are still very short. It's the biggest short they have built in silver in 8 years. I shared that information, of course, in the Telegram group, and once they're out of that short, I would let you know, and we will load heavily for our parabolic wave 3 in silver. Now, looking at crypto, looking at Ethereum, I wrote, guys, yesterday, and I am seeing the strong beat, the strong cumulative volume delta on spot increasing despite the price is printing lower lows. So I understood that there is a certain point that the divergence here would play in, and this is exactly the moment of reversal. That's why as soon as I saw that, I like the CVD spot bid, and we went long. And that's why I loaded on other alts as well. And let's have a look right now how Ethereum chart looks from here. But as you know, before I'm gonna look on Ethereum, I always like to look on a relative strength, Ethereum to Bitcoin. And here we have our first market structure break, something that you all already familiar with, this famous MSB that I keep talking for the entire week. So here we are able to maybe potentially create the higher low and reverse from here. But this is just on 1 hour. If we are looking here on the daily, to be honest, it looks like we are just retesting that zone that has been here for a while, just like grabbing the liquidity from the fair value gap here. And it might be that we actually reject from here. What happens in this case? In this case, I am still trying to play long on Ethereum, just on this intraday retest of the range breakout. So I would like to still go long somewhere here at around 3,180, and my invalidation will be a closure below 3,080. So I give myself $100 on ETH to be wrong, and I would target the same height, 3,660, as from the previous video, as it has been explained. All these highs, all that liquidity residing here, I still would like to target. And it's okay. I can be one time wrong, and it's okay as soon as my risk reward is 4.5 to 1 or 5 to 1. I can lose 1 R, as it happened on Wednesday. I've been kicked out of my position. I lost 1 R, and I'm happy to allocate the second R to try to get it back. As soon as you are trading and your trades are good, that's 3 to 1. It's okay even to be 2 times wrong. You don't have to be 80% times right. Yes, of course, after doing it for so many years, my win rate is also quite high. It's above significantly 60%, 70%, depending, of course, if you count only scalps or swings. But yes, you don't even need to be 50% times right. It's enough to be 40% times right if your risk reward is good. Something also a lot of people are not considering. And here comes another piece of advice that I wanted to share with you when it comes to portfolio allocation. First, you can have this intraday trading portfolio like I showed yesterday. Quick in, quick out, being in a taxi within 20 minutes, made a few grand, parked them, withdrew them. Fine, that's to cover the living costs. This is something where you can have the target. You want to make $500 a day. As soon as you're done, you're out. You don't even care what the market is going to do from here. If Ethereum shoots to $4,000 in a matter of the day based on some announcement, that whatever happens, you don't care. You just make what is right for you. $500 a day, $5,000 a day, $30 a day, depending on your portfolio size. That's the trading, that's the scalping account. Then I recommend having another account that is not so many people are talking about. My second account would be based, for example, right now, I am still very bullish on Ethereum. I think there will be a period of time when Ethereum will be trading between $5,000 and $7,000, and it's much shorter from now than most of us think. We are probably talking here about 12 to 24 months. So if I'm fundamentally so bullish on Ethereum, but Ethereum is sometimes behaving like I've been behaving in the last 2 days, what I would normally do, I would create an account, I would buy Ethereum, and I would trade Ethereum margin contracts, increasing my Ethereum stack every time Ethereum goes down. So I'm actually getting paid for every opportunity of buying more Ethereum. So I would actually create more Ethereum for Ethereum price to go down. So inevitably when Ethereum, and I believe so, right? That's my hypothesis. I might be wrong. But once Ethereum is at 5,000, instead of having, let's say, 50 Ethereum in this account, I would have 75 Ethereum on that account, capitalizing on every $100, $200, $500 drop. And the best way to do so, in my opinion, is actually to find an exchange that allows you to use spot holding as a collateral, and then you can have an inverse future contract that allows you to increase the size of that collateral. I'm just gonna show you, so it's actually quite simpler. So here, for example, I have, let's say, this account, roughly $500,000. It's on Bybit, and I purchased 50 Ethereum yesterday on the bottom right. So I just click here, use as a collateral. I enable this functionality, and you see my initial margin is going down. And if I want also to use Phantom as my collateral, that goes down even more. So I can go here. It's called derivatives, inverse perpetuals, and I select, for example, Ethereum inverse perpetual, or it can be Litecoin inverse perpetual, it can be Bitcoin inverse perpetual. And here, if I'm expecting that it's gonna come to test the zone, this area here, I can also create a short position if I want, not long, apologize. Let's get short position, and it's gonna look like following. I'm gonna increase my stack of Ethereum, just going short, for example, into that zone. And if I am wrong, if the stop loss is being hit, that's okay, because I still make more money, because my 52 Ethereum meanwhile increased their value significantly higher, that my hedge short has lost its value. But I know that whatever scenario is gonna take place, I'm gonna make money in this or other direction. This is something that most people unfortunately forget. They forget about inverse perpetuals. They only trade in USDT, and USDT is not even like easy to trade right now, for example, for European customers. That's why I also moved to USDC trading. But in all that said, separate your accounts. we said account number one for short-term scalping, where you just want to make this a few hundred, few thousand bucks to cover your living costs. You take them out of the exchange. The second one is the big bet. They're measured in Satoshis or they're measured in Ethereums, something you believe 5 years from now. For example, you believe Bitcoin will be $300,000. Then try to increase your Satoshi stack. That's what your maximization should be. And that's quite based on macro. That's quite based on what we discuss here on the channel. And the third one, what I'm personally doing mostly with stocks, but you can also do it with crypto. It's this long-term accumulation. In terms of stocks, I would use the options. I would, for example, sell the cash secured puts against my holdings. So it's kind of the biggest account I have. The same can be applied to crypto. It can be a long-term sport allocation that you don't need to manage intraday, but you load heavily in the moments when we have these drastic capitulations events. And we here in crypto are not having the lack of those events. You remember in April, Iran-Israel escalation, immediate 15-20% drop on many alts. We have maybe like 5 to 10 events like that in crypto, where market makers are just kicking out the open interest, over leveraged retail traders. So be ready for that. Sometimes you don't even need to trade intraday. You don't even need to make this few $100s that I'm talking about from the first account. You can just focus on the third account, capitalize on those 10-15% drops, get on spot, put your stop loss at the break even, and then let it run. And when you see, of course, we start to lag, and on the lower time frames, we start having the bearish market structure breaks. We can't print any more new highs. We start printing lower lows and lower highs. Fine, you're out. You make 8%, you make 12%, you're out. So those three strategies I would use in crypto, and those two strategies like trading and option assignment, I will use in stocks. When it comes to Bitcoin, I think we're gonna, on market open here on Friday, maybe on PCE data, we're gonna swipe through that high, and I think we're gonna retrace lower, probably to that area here, similar to Ethereum. And looking at Bitcoin dominance from here, I am still seeing a very bullish uptrend. I think that this is yet a little bit dangerous because with that Bitcoin dominance, keep raising. As soon as BTC price would go down even 1 or 2%, alts can totally give us another capitulation week. So I think it's better to load on spot and those moments where alts gonna give us this capitulation week, but we have to be vigilant and wait for that moment to come rather soon. Guys, with all that said, I wish you a good weekend. If you wanna try it, inverse futures, I leave the link in the description below. On Bybit, you get 500 USDT USDT trade for free. You only need to deposit 100. We see each other next week, and then we cover more the stock market and macro. A lot of important news ahead of us. Much love, and I see you soon. Bye.